Today is the 20th of April, and we're going to be looking at the data, of course, on our screens. So let's have a look and see what happened. Today we didn't have too much heavy impact data. We did have initial jobless claims and the Philadelphia Fed Manufacturing Index and other bits and bobs. Data is showing a lot of negativity throughout the whole of the US economy. This obviously isn't good and shows that the rate hikes that the Fed have been doing and sustaining are now affecting the economy while they combat inflation. So the question really relies on, or really entails, how long will the Fed keep raising rates or holding rates until the economy busts, right? In terms of how negative the numbers have to get, how many people have to lose their jobs until the Fed will revert. Well, I believe the answer to this is it depends on when inflation is actually fought against. In my opinion, and from what I've been taught and I've learned, that the main goal at the moment is to reduce inflation down to their 2% goal, as they've repeated time and time again. So to achieve this target, they're going to have to sustain these rates at a high level, and they're also going to have to potentially raise a little bit higher. We will see what they say next FOMC, and at the moment, all we can do is sit and watch and analyze the data and how price reacts to the current data while this is all ongoing, right? So let's have a look and see how we benefited off today. So we just took trades on gold today, actually, rarely enough. GJ just ranged all day, not a lot of trades in my opinion. And like I mentioned, not a lot of minimal impact data. 0.800 DXY above, we're still struggling to break above. So at the moment, I was just playing sells or buys, depending. If we broke above 1997 with DXY failing to break 102, we could see continued gold buys, especially with data being terrible, which it was. That supported this. So let's have a look. Nice, easy. It actually got touches and taps of 2010, which is nice. So let's delve into our markets and see what we looked at. So you see the negative data there, unfortunately. We had two losing trades, so two 1%ers and one 0.5%. I roughly 0.5%. I initially went with a trade this morning at 8:13 in the morning. Took a trade, and hit my SL. The reason was because I was looking for a retest. I mean, then again, it doesn't go with my trade plan, right? I'm looking at this now. I'm seeing, right, my trading plan, trying to trade around key levels, which is 1997 in this case, and with price respecting these key levels in line with market structure. This entry, in my opinion, is a bit aggressive. It doesn't make sense. The entry actually is around down here, right? Closer to 97, rejecting this. But even then, it's very messy. There's not a lot of good price action, in my opinion. So this trade was very aggressive, very dumb. I think I just wanted to get in the markets for the sake of it. And then if we look at next trade, same idea, and closing a loss as well. So overall, terrible entries, terrible trade management. I don't like my mindset when going into this trade. I think it was very aggressive, risky, and the price action for these buys once it broke above 1997 wasn't there. Two big bullish candles, but then we had nothing afterwards, right? It didn't sustain itself. It was invalidated near enough straight away. I just don't see why I would have taken these trades apart from just wanting to be in the market, right? It's good to self-analyze going forward, including your own trading, right? So then we just left it. Didn't look at the markets until after the data. So after the data, we got entry here around actually after NYSE open, usually a good time with a bit more volume. So the data's here. You can see big impact, 130 pips from 1997 roughly to 2010. Nice to see. And then we were looking for an entry. And once again, in my opinion, this is very a risky entry. There's no real. There was market structure that I was playing on the 1 hour and 30 minute, which it rejected previous 1 hour highs. I do remember that. So as you can see here, my second entry rejecting where my cursor is now, these highs here, rejecting there, continue back up and retest 2010, which we just created. And as we look through 2010 or around the 2010 area, we can see consolidation downwards, downtrend. And once it broke out of this downtrend, that was my entry. So I took an entry on that with the stops just below here. So the stops are about 26 pips, I want to say. And my stop loss never got hit. It was where is it? You can see at the bottom there, 2,293, so right here. I mean, it must have been pips away from being hit. and as you can see, it flew and hit 2010, which was my TP. And obviously that's nice to see. In 2010 400, sorry, these candle bodies here. So it's nice to see trade come in. I mean, that was just failing to break once, twice, the triple bottom, if you want to argue, and fly up to retest 2010, failed to sustain, and then came back down. Overall, low volume, volatility day. And going into tomorrow, going to be looking out for better positions than I did today, definitely. Being mindful that my entries on gold seem to be a lot worse than on GJ. So if we had a look at my whole history for this current trading month, my GJ entries have been more profitable and more consistent compared to gold. I've only taken 4 entries in gold and 3 of them with this just today. So going forward, I need to be mindful how I'm entering gold. It has to be treated a little bit different, but overall, I'm happy with the performance going and mindset going into tomorrow.